Thad, you and Mike both mentioned record low interest rates, but there have been a lot of questions about mortgages, the availability of financing, credit requirements, down payment requirements. So we're happy to have with us today Dan Moran, who's Executive Vice President of Sales for Guaranteed Rate. Dan will be heading up sales for Proper Rate, which is our new joint venture with G-Rate, coming soon. Dan, welcome. How you doing?
Okay, great. Thanks for having me.
Good. Well, what's the one thing that buyers need to know about getting a mortgage right now?
I think the one thing to know is that there's a lot of myths out there, right? So you're hearing that there's a requirement of 20% down, or that you have to have a 720 credit score, or in some ways too that the mortgage market isn't functioning as it was. And I would say it's functioning even better than it ever has. We've got people who are at home working in a highly efficient manner. We've got more mortgage inquiries today than we've seen, considering unemployment numbers and whatnot. And the reality is, not only are we approving loans, but we're closing loans each and every day.
That's great. I'm hearing, I think we're reading that you need 20% down, you need a 720 FICO score. That is not the case necessarily, right?
That's not the case necessarily. Again, I can't, from a macro standpoint, there may be, retail national lenders out there that might require a 720 credit score. But just because you went to a bank, let's say, and went for your mortgage application and they said, hey, we can only offer a loan to you if you have 20% down or a 720 credit score, don't, virtually walk out of that bank or the virtual mortgage application and assume that you can't get financing. There's plenty of lenders out there. Certainly Guaranteed Rate is one of them that can offer a lot of flexible and more financing options out there.
So can you buy a home with 10% down? Can you buy a home with 5% down?
For sure. I mean, you can go, your lending options in current environment is still as low as 3% down. So consumers, and especially I think Mike and Thad talked about it earlier, there's plenty of first-time home buyers out there who are just, dishing away money on rent on a month-over-month basis, when if they put 3% down or 5% down, their purchase, their monthly mortgage might be the same, or in some cases even lower what they're spending in rent every month. It's pretty exciting.
Dan, so what's changed right now about the process of applying for a mortgage?
Well, Peter, for applying for mortgage, I'd say it's very normal. It's very much the same. People are accustomed to applying for mortgage online and initiating that piece. But I'd say one of the changes within the mortgage process itself, even closer towards the end of when you're going to actually go for your clear to close prior to your actual closing, is the verification of employment process. And we have an attestation form in current environment for lending. This attestation form is basically a form and or a document that's protecting the lender to make sure that you are still employed. And in some ways too, we're looking to forecast out. There's people who may know or may not know of what their employment status is going to look like. We're just trying to work with those people to make sure that that they are still going to be employed. We don't want to put anybody in a home if they can't afford it, but in the same sense, we want to make sure that everybody's in the right position.
Well, finally, we can't talk about mortgages without talking about interest rates. And it seems like every time we do one of these episodes, interest rates are always going down, but it looks like they've gone down again, right? Where are they sitting at these days?
Yeah, I mean, rates are constantly bouncing up and down. And, a few weeks back when the Fed first announced, where they were going to be at from a rate standpoint, we had plenty of consumers calling us saying, hey, I heard rates are at 0%. Just so everybody knows, mortgage rates are never going to be at 0%. We'd love them to be, but they're not going to be. But in current environment, you're still seeing, some rates that are going to be in the, upper twos and the low threes. So if you think, again, as Mike and Thad talked about earlier, you talk about buying power, especially from a historic standpoint from rates. We're in one of the best lending environments from a rate standpoint that I've ever seen in over 20 years of working in the mortgage business.
All right, Dan, thank you very much. Good stuff. Mike and Thad, great to see you guys, and we'll hope to see you soon.
Thanks, Peter.
Great to see you again, Peter.
Thanks, Peter. Thanks, guys. Good to see you.